Guys, it was a red, bloody day in the market today. Big pullbacks from a lot of stocks. You can see from our stock map over here, a lot of the big names were down today. Microsoft, Apple, Google, all of the big players were down. Tesla did okay, and Amazon did well. But most of the players, especially in the strongest sector, the technology sector, were down today. The Dow finished 68 points down. Nasdaq finished 49 points down, and the S&P finished 8 points down. So a bearish day today. You can see most of the stocks within the New York Stock Exchange, Nasdaq, and Amex declined. Some of them made some new highs, but this wasn't a big number. Just 457 is not, a ton of stocks making new highs. Some stocks crossed above the moving averages, and overall the sentiment was that the market should still be bullish. 70% of people who voted on this poll thought that the market should have a bullish sentiment. However, clearly, based on the finish and the just the review of the entire day, the market was bearish, obviously. And so what this indicates to me is that investors, traders, people who voted thought that the market should go higher today. And so they must have been, a little bit surprised by today's trade-in action. So what caused this decline? You never know exactly what caused, what pinpointed the exact decline. There's so many different factors that goes into the market's moves, but there's a number of things that have been going on, and you can sort of connect it to those things. Stimulus payments were approved and signed by President Trump on Sunday, so that was good news, but people have not been incredibly happy about the amount of the stimulus payments, the $600. And so the Democrats and President Trump tried to push for an increase to $2,000, but that was blocked today by Mitch McConnell. Not sure if that has anything to do with the market's dip. It could also just be the fact that the market is pulling back from record highs. It's been trending upwards. So there's a number of reasons that you can speculate as to why the market is trending lower. But bottom line, as long as you have stops in place, as long as you're prepared for days like this, then even if you're not expecting it, you can still take the right action throughout the day. So we were looking at trades, a trade on SPWH for a breakout of this $18 level. It never happened. That stock throughout the day, if you look at this chart here, you see it just kind of got crushed at the open until about 10:30, and then started to climb back higher and tried to break above its opening level, but then got pulled all the way back down and then started to trend higher and ended the day basically at the same level that it was when it started the day. So that is its base. It did nothing really today. So there's a lot of accumulation that I might think inside of here. A lot of people selling, some people buying it back up, selling, buying it back up. So there might be some new hands in here. There was a significant demand candle before the close, and so that's interesting. That is very interesting. We'll keep this one on watch. It is still on our list for a good breakout. We'll just have to wait until tomorrow. So if you haven't seen my analysis on this one, take a look at it from yesterday's video. You'll get the full details on that one. The stock that we're looking at today is BCOR. So BCOR is an okay setup. I will not call this an A+ setup, not even a B setup. This is more of a C range setup. And there's a number of reasons. It's below its highs. So let's go to the daily chart. It's approaching some of its highest levels year to date at $15 in that range. However, it's been struggling to stay above that level. Every time it's gotten there, it's been pulled back. So on the daily chart, year to date, it's approaching a breakout for the year. But on the weekly chart, it's pretty low compared to what it was before. And you can see right here on the weekly chart that $15 level is the important primary level in this price area, right? And then the next important level on the weekly chart is not until about $20. And so there's a huge gap there huge gap. And so we'll have to see how this performs um, going forward. But there's a lot of room in there for profit. Would I hold it all the way up to $19? It would depend on the fundamentals. On this particular stock, they don't have incredibly strong fundamentals, so I probably wouldn't. But is there room in there for a breakout? Absolutely. Let's look at the monthly chart really quickly, and you can see that that $15 level, once again, right here, is a strong level. You can see it used it as support back here in 2013, used it as support again in 2014, broke below it, and then tried to climb back above it in 2015, but then got pulled down. Finally broke above it in 2017, continued higher, thought the skies were clear, and then it got aggressively pulled back down in 2019, started its downtrend, and then 2020, the beginning of 2020, just sort of crushed it. And this actually goes along with the financial sector as a whole, where they were doing really well, doing pretty well for the past 4 years, and then COVID kind of hit them really hard. This stock looks like it was downtrending even before COVID, but COVID really, put three candles going down on this chart for the stock. And so, we, well, I think it can break out of this $15 level. There's some things that make me optimistic about it and some things that hold me back. It's in the financial sector. That hasn't been one of the stronger sectors lately, but that is a sector that does need to get above its pre-COVID levels. I'll actually show you guys that really quickly. So that sector still has room to get above its pre-COVID level. Let me pull that up for you. All right, so right here we see all of the sectors that have their performance. The lowest performance sectors year to date are on top, and you can see the financial area is about the fourth one down on that list. And so this is their pre-COVID level, and so the stock is about 2% away from that pre-COVID level, which is going to give it a little bit of a challenge, I imagine. It's going to be a resistance area for it. But as we start to stabilize in 2021, it can break above that level and start to climb. Do I have any doubt that it'll break above that level? I don't. The market has shown that it typically goes up over the years. And so, I believe that that can break out and go forward. But the question really is, will it do it? Will it help this stock break out soon so we can make some profit on it, and the sector can propel individual stocks like this one up higher? We'll have to find out. We'll create a trade that prepares us for that scenario. So some quick things to note, below 50 million on the float, so I like that. RSI is not above 70, so it's not overbought. ATR could be higher, it's just 53 cents, so there's not a ton of room for profit there. So this might be a multi-day swing trade, because you might want somewhere around $1 for this, and so it might take a couple days to get a good profit on it. It won't do that in just one day. What else we got? Average volume is just 300,000 shares traded, which isn't a lot at all, and relatively it's been trading below that number. So today I did 245,000 shares traded, which is not great at all. Not great at all. Insider ownership is below 1%, so that's not exciting. And then institutional ownership supposedly last quarter was reported to be 95%. And so what that tells me is that the big boys might still be in this play, and they're holding on because that can indicate that this stock is valuable and it's underpriced right now. So that's a good sign that the big boys were in it so heavily last quarter. So that's one of the positives about this stock. Earnings per share quarter over quarter, they have been increasing, and they've been in the green for a while with that for the past 3 years or so. Sales quarter over quarter has been increasing for the past 5 years. And it is looking good this year. It's not, the most incredible number we've ever seen, but it is looking good. Let's see, and they do have a bit of debt, so that doesn't, look incredibly good for them. And it looks like recently in November they topped revenue estimates. So, this stock is about average. And can you get a really good play on it? I'd give it a C grade. which would simply mean, I'd take this trade for the break above $15 because there's so much room for profit. But this is not going to be, a long-term investment. I'm not going to ride this all the way up to $20. It might get back up to that level. Who knows? But I wouldn't put myself at that much risk. We'll just have to see how it performs and assess it on a day-to-day basis. So this one looks good for a trade. Going to monitor it carefully due to some of the other factors that I mentioned already. I won't let this one drag down the portfolio, of course. But this one's on the list. This one is on the list. So we'll watch this one for a potential breakout. All right, guys. See you soon. Take care.